What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future. I'm also going to do an analysis of what's going on with the latest earnings report because we have some very important numbers that came out. So I'm going to do an analysis of the numbers, talk about how this could affect the share price, and then talk about why this is very important for Tesla and why they actually did miss on some metrics. Now, before I break anything down, I got to mention a couple of things just real quick. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends in just 12 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was pushing up a bit going into today and also yesterday. We did actually close green up 0.84%, but now Tesla's starting to downtrend as earnings was not as great as many people would have anticipated. So let's break this down very, very quickly. So the headlines are coming out. Tesla missed on earnings. Tesla's not doing as well. Tesla comes in light on revenue but beats on earnings. Now, if we look at the actual numbers, we can see right here, the third quarter earnings came out after the bell today, after the market closed, and we had earnings of about $1.05, that's the EPS, versus the 99-cent expectation. Now, other sources I found were expecting it at about $1.01. So there were some differences, but it does not matter because they did actually beat on almost all of the different predictions and expectations. When it comes to revenue, if I'm actually going to break this down, we have 21.45 billion in revenue versus the 21.96 billion expected. So they missed on revenue due to the fact that their margins are being affected, their higher operating costs during times like this, and it is affecting them, right? In the different gigafactories, we are also seeing lockdowns perpetuating in China, so it is having a negative effect on them. Even during this time, Shanghai was going through some hardships. So I just want to remind everyone, when it comes to the sheer numbers alone, Tesla did break a record when it comes to production and deliveries. So they delivered 343,000 cars in Q3. They produced 365,000, which is like good, which shows Tesla is growing at a good rate. But the real question is, could they continue this growth, which I believe they could. But if they are continuing it, how profitable could they remain? Because remember, Elon Musk once mentioned that building an EV car is not that difficult. Building a nice car is not as difficult as some people think. Mass producing it, staying profitable, kind of like working on the supply chain and everything, that the supply chains and like the whole like operating systems, that is what's much more difficult. And that is the thing that's really telling in the latest earnings report. So yeah, there are lots of articles saying Tesla's falling, they didn't do as well. But let's actually look at the numbers. So this is from the official financial report from Tesla. Going down here, the operating cash flow, this is just the free cash flow, is at about $3.3 billion in Q3. That's a $2.2 billion increase in their cash and securities in Q3 to $21.1 billion in total. So once again, that's good in my opinion. They need a lot of cash during a time like this. But looking at the data, there are some things that aren't as good though. And I have to be as honest as possible. So the operating margin reached 17.2% in Q3. And we're also seeing free cash flow going up. Profitability, we can see right here with higher margins, with a 17.2% operating margin, which is, once again, guys, a little bit concerning to some investors. Looking at the gross margin at 27.9%, some people are kind of like antsy when it comes to these numbers. Looking at the record energy storage deployment, we actually saw a record in this sector because of the fact that the Tesla energy sector is getting bigger as I speak. And also during Q3, the beginning of Q3 tends to be relatively warm. I know like a lot of people don't anticipate that, but it tends to be warmer during that time. So there was still high demand for energy. And as we are approaching winter, it's also going to get higher approaching Q4. So that is a good sign for Tesla. But when you break down the financial summary, this is where things become more interesting. So Looking at the overall revenue, it's a 55% up year over year. And we have a pretty decent increase from like Q1 to Q3 for the entire year itself. That's like what, 15, 16% or something. So right here, nice increase from Q1 to Q3. But the real question is it as high as what we want and to what cost? What is the cost of achieving numbers like this? The margin was at about 27.9%. So it is on this like downtrend. It's actually the same as what we saw in Q2. Overall, it is down year over year. Looking at the revenue, 56% was the total year over year revenue. It was actually at about 21 billion for this quarter alone. But the gross margin on this was at 25.1%. So still not as convincing, guys. Looking at the operating expenses, we have high amounts of expenses. We actually have a slight increase year over year. And also the operating margin is once again at 17.2%, which is what is making some investors very concerned in a way, but not like they're not like losing their minds over this because they know Tesla's a bigger long-term play. But right now in our economy, seeing as rates are getting higher, it's becoming more difficult for Tesla because we have these new giant gigafactories in Berlin, also in Texas, and now we're still working on operating the systems. We're still working on improving the systems, the production means, hiring employees. That's a lot of work that still has to be done. So they're not at the same level of Giga Shanghai. And that's the reason why during a time like this, it's a lot more difficult. But Tesla is going to persevere. They're going to prevail eventually. But right now, at the time I'm talking, it's tricky. It's an obstacle, and it may slow them down for the short term, especially seeing the fact that Tesla's overall backlog of orders is actually getting smaller. This is because during a time like this, people are less likely to want to take out loans. They're less likely to be wanting to, buy cars during times like this. So we are seeing the economy and Tesla starting to get affected by the rate hikes. Now, with the increase in the overall cash flow, I think that's essential for Tesla during a time like this. Net cash provided by operating activities is also up. So that is a good move that they're making, in my opinion. When you look at the revenue, I mean, in the financial summary, you could see right here. Let me just look at this. The revenue was 56% up year over year in Q3 to about 21.5 billion, but it was impacted by the following things: growth in the deliveries, increased ASP, and also declined sequentially with the prior quarter's ASP because of the fact that there was limited Shanghai production at the time. There was growth in other parts of the business, but negative on the FX impact. When it comes to profitability, we could see that $3.7 billion was what their operating income was improved by, resulting in a 17.2% operating margin. People are still not too happy about margins overall. Increased ASP, growth in the deliveries is what helped them out, but the higher raw material, commodity, logistics, warranty, and expedite costs, they all had a negative effect on them. Not to mention the fact that there were other big costs coming out there. The cost of production for Berlin and Texas, they also caused this to actually come down a bit. So that's what really affected their margin, which is why it's not the best earnings in my opinion. When it comes to cash, I already mentioned this. They have a lot of cash on hand. Production is obviously up for almost everything year over year. However, for deliveries, we are actually seeing an increase in total deliveries. But when you account for operating lease accounting, we actually have it in the negative form. So because of that, there's actually a decrease in the amount that are operating in lease accounting. That's important to note. But when it comes to the Model S and Model X and the Model Y, which is very popular, these are still up big time. So they're doing well when it comes to being able to produce the cars. When it comes to deliveries, though, I do see this potentially getting kind of like impacted. So we are seeing an increase in supercharger stations, connectors, and all that good stuff. As far as data goes, the current capacity of, I believe this is Fremont, we are seeing for the S and the X is 100,000. For the 3 and Y, it's 550,000. Once again, that's pretty good for them so far. Shanghai's are already well above 750,000. Very, very good for them. And Berlin's at about over 250,000, at least for the time being. And Texas has about 250,000. However, they will be working on the Cybertruck, the Tesla semis, the Roadster, the Robotaxis, and other things, more in like Nevada and other states like that. And they are still in the development phases. They are in the early production phase for Tesla semis. That should be ramping up very soon. That should be good for them as well. Now, in Shanghai, what does concern me is the fact that we have more lockdowns in China right now. So this could slow down demand in China itself. Not to mention other factors out there, the economic hardships people are going through. It's all going to have a negative effect from that end. So that's why I'm still very, very cautious. Full self-driving technology, it's doing very well. The vehicle software, they're still doing well on that, but they do have a lot of big adjustments that they're still working on. They're working on making it more energy efficient, especially with more technology that's going to actually provide suggestions for that. Battery, powertrain, and manufacturing. And we can see right here and there are many challenges in making large castings. Now, one cast systems tend to be a lot more beneficial for them, but they're still working on that, especially in Texas. So I want to wait and see how the updates really come for that. But besides that, they're doing well. When it comes to energy storage, that increased 62% year over year. Once again, a big demand is actually increasing in this sector, and I'm very proud of Tesla for this. I think it's going to get bigger and bigger for them as time goes on. You guys can see the red bar right here showing the increase. Solar is up about 13% year over year, not too big, but it is somewhat of an improvement. I do hope this continues to grow. Overall, other things out there are also showing some good metrics. Tesla mentioned, and I quote, "We plan to grow our manufacturing capacity as quickly as possible over a multi year horizon. We expect to achieve 50% average annual growth in vehicle deliveries." So they're still sticking by this claim. They really want to see these goals be met. They're still working very hard for them, and that's a good sign in my opinion. They're very ambitious. Looking at some cool pictures. People are working very hard on producing the cars. This is the massive Berlin Gigafactory. It's huge. We have lots of people working very hard, and huge shout out to everyone that's part of the Tesla team. They have big robots as well working on the assembly lines. Very, very amazing. And I don't want to go into too many details about these things. They're kind of like redundant, but it is important to note that if you look at the charts right here for the year over year growth, it did actually decrease a bit compared to year over year growth from the very beginning. So, very important operating margin, and it has been on this uptrend for Tesla. However, some investors are still kind of concerned about this. Coming down to, let me see, the vehicles in transit has been on this big uptrend, so that's a good sign as well. It is projected to see a big increase for Q4, in my honest opinion. So that's essentially what we're seeing. For financial statements, once again, we are seeing more things about the energy storage and things like that. I mean, overall, guys, it's not the best quarter. There are big pieces of growth that were announced, but the margins, the overall operating expenses, the hardships Tesla goes through, and actually meeting all expectations and also continuing to ramp up production, it's coming at a cost right now. And costs with inflation being high are making it even harder for them. So the current macroeconomic standpoint is what is slowing Tesla down. It's not entirely their fault. They have a lot of obstacles and lots of work to do in Berlin and Texas. I'm hoping they really, really continue the growth that they're on. For the long term, I'm still very, very bullish. For the short term, we could see some pain, guys. We're down almost 4% in the after hours alone. So we're not necessarily crashing extremely hard, but Tesla's actually trying to hold in the after hours. It's very close to that 214 range. It's getting closer to that 210, 211 zone. I'm going to be watching that for tomorrow, but I wouldn't be surprised if we get a bit of a drop in Tesla, maybe the markets as well. The whole market can be affected, and Tesla is likely going to be retesting 211 very soon. If we don't hold 211, we have the potential to come all the way back down and actually fill this gap. Let me show you where the gap is. Uh, it's all the way down here. So watch 211 very carefully. Where's the gap? It's actually down here. There it is. So if we break 211, because Tesla's currently like right here where my cursor is, if we break below 211, we're likely going to fill this gap, and Tesla has the potential to come all the way down to, let me see, this $205 range. Very possible. We're actually only about like $11 away from that. So it could actually happen as early as tomorrow. Elon Musk also tweeted that he's going to make a big announcement, or he basically implied he's going to make a big announcement. He won't let us down, which I think is awesome and all. But we'll have to wait and see what he says. He's actually speaking a little bit later. I don't have time to record what he's going to be saying. So please be on the lookout, guys. Remain calm, cool, and collected. And I will most definitely see you guys in the next video. Please be very, very cautious playing Tesla tomorrow. Watch your levels very carefully. Oh, and the last thing I want to say before I end the video, one last thing. Resistance is at 226, 230, 233. I don't really see us breaking past 226. We're we had supported 220. We already broke below it. We're gonna most likely gap down tomorrow. So I'm hoping that we could get a bounce and maybe we could fill the gap above a little bit later. But for tomorrow alone, as of right now, we are looking more bearish than bullish. And I wouldn't be surprised if we retest 211, break below that. And like I said, the gap fill looks very possible. Anyways, I wanted to make this as simple as possible. I think this video is kind of long. I went over a lot of big points. Thank you guys. Have a good one. I'll see you guys in the next one.